I'm Sharon Constanson. I am the chairman of the South African Chamber of Commerce that is based in the UK. To all our members and to those that have come from far and wide, thank you very much for joining us. I hope this will be very helpful CPD as well as personal success stories that you're going to gain out of this engagement. So thank you very much. I know I will be listening and learning too. So to the team, can I hand back to you, Dylan, please?
Thank you so much for those kind words, Sharon. Much appreciated. So, as Sharon said, important topic. This session actually comes off our highly technical, engaging sessions that we have had with various SARS-recognized professional bodies, such as SAIT, CIPA. We've got FBI as well. Cyber's coming up. SEMA's approached us. And it's part of our industry-wide contributions, just showing the importance of this topic and how it's impacted everyone globally. Jerry himself actually a few weeks ago even presented on this in Mauritius. So highly, highly important topic. I also just had a look at the profile of the attendees today. We have really extensive representation from the market, which makes it exciting to be able to share this topic. I saw from junior level right up to very senior respected tax practitioners and even group head of tax professionals, representation from some of South Africa's largest corporates, multinationals, banks, universities, wealth advisories, and very well-respected C-suite level executives across various industries and global groups. And that is an impressive audience, and I really hope that you find today's topic valuable. Just a bit of the agenda and the ground rules. There's a background on how it was announced, criminal sanctions, supporting documents, a bit of step-by-step and the practicality on the e-filing side, some examples, and then as Jerry always says, please, lots of questions. I think in last night's session, we had about 37 questions, and the day before we had 62, which we managed to run through, and the session actually ran over quite a lot. But it was just amazing to see no one dropped off because of the value of the questions and how an answer can answer somebody else's question. So we please just ask you to get those through and keep the session engaging. By default, everyone's videos are off, mics muted. All questions, please, in the Q&A section on Zoom. That's the speech bubble. Any technical difficulties, you can communicate that in the chat section. There will be a poll at the end of the webinar, and we'll briefly unpack that. Answers are strictly confidential. Again, lots of questions, and we will share the presentation out after the event. Then, for those of you that are dealing with Tax Consulting South Africa for the first time, we have been in existence for over 18 years. And Jerry himself has the normal story of many others that have started their own business from his dining room table and with his parrot. And he'll tell you the story, both of the parrot and the dining room table are still with us today. And it's quite a phenomenal story that Jerry does share. We've now since grown into the largest independent tax practice in South Africa. We're recognized by SARS as a top 6 tax practice in terms of e-filing volumes. And from what we know, the others are in the banking sector. We are tax technical at heart and passionate for what we do. And I think you'll see that coming through during Jerry's part of the presentation. And just, we always love to share this proud moment. And because of our contribution to expatriate tax, we were approached by LexisNexis to write South Africa's first expatriate tax textbook. There are now 2 editions. I know there's been many changes. So if LexisNexis does approach us for a 3rd edition, we'll definitely consider that. And a proud moment, Judge Dennis Davis, the esteemed Judge Dennis Davis, saying, in summary, the 2nd edition of this carefully considered book, which not only deals with all the various tax implications of immigration, emigration, but the taxation of residents working offshore, remains an invaluable guide to an increasingly complex set of tax challenges. Given these changes, it is a more significant addition to our body of tax literature and will remain essential reading for anyone advising his or her client with regards to the tax consequences of migration and non-resident accruals. Now, I know we do have many advisors on the call as well. The professional partner network is fantastic. We're a part of it. And just over the last few months, it's grown tremendously. We have a Facebook group as well, which we will share on the chat section. And there's a growing community of fellow professionals sharing knowledge, sharing ideas, sharing what's going on in the industry. And I encourage you to please join and really just share back from what you're learning as a practice so that we can all get smarter together. And ourselves as well, we share a lot on those groups in terms of what we're seeing in the market. Then I thought, let's throw this up, bit of a throwback. Last year we did the roadshow with the chamber, and we did it at Carey House in Jersey. At Carey House in Guernsey, Standard Bank in both Isle of Man and Jersey. It was wonderful. And I wish we could have done the session in person as well. But you'll see some photos of Sharon, some photos of Jerry, and really it was just a wonderful event that we had last year, and we're privileged again to be speaking to the chamber members. Then Jerry, absolutely you're in safe hands with him. 25 years plus experience, and you'll see that his presentation style is highly geared towards information sharing and drawing from the vast practical examples we encounter as one of South Africa's largest 6 tax providers. And just before I hand over to Jerry, just a little bit of general comments. As I mentioned again, it's amazing to do a session again with the chamber members and following the roadshow. This is a high-level overview of the new SARS approval of international transfer, the enhanced TCS process that consolidates the FIA and financial immigration into a single application. So it's not the heavy technical sessions that we've been having with the various SARS bodies, but there's enough meat on today's session that hopefully you can leave just being a bit smarter. Important to understand that government is following the money, and I hope you enjoyed the song in the beginning of the session. SARS is being clever in their approach to track down non-compliance with an effective self-audit, following the money trail. And we're just sharing what we encounter as one of South Africa's largest 6 tax providers, and for the benefit of the market becoming smarter together. So with that being said, I'm going to stop sharing from my side and just give Jerry a moment to get his slides ready. And then he'll run through his part of the presentation today. And then we'll just end it off with a live poll, bit of a Q&A session. And then, yeah, lots and lots of questions, please. We really would appreciate that. Hi, Jerry.
Hi,
Screen looks
well.
good. I can see the slides. Yeah, see you well, and I see your slides. Fantastic.
Good. Thank you, everyone. So this is a 2.5-hour presentation, which I'm condensing for you into a small segment, and I'm kind of pitching this at the level which is kind of advisor and above advisor level. So the real idea is to just kind of show you what's going on and where it comes from, and hopefully you will come out of this a bit more smarter. Welcome to join one of the more detailed sessions. I don't hold them anymore. The team holds it now. Because they've become smarter than me with these, but I love the chamber, so I'll take the spot. So I think if I really have to explain this for you, what do we think SARS is looking at? I think there's this comment around strategic intent, which you'll see is referenced a couple of times, and in this process, at the back of your head, perhaps just think they are asking you 3 questions. They're asking you, where you're getting the money from that you're transferring. Show us your assets at cost. We want to see what you've got and what you paid for it, just to understand that there's a kind of a balance sheet recon there. And if you're a South African resident, we want to know exactly where you're putting that money. So it's those 3 things: where you're getting money from, show us your cost, assets, and liabilities, and where you're putting that. And I think we kind of thought, well, what does this all mean? It really means they are following the money, which of course comes from all the president's men, which implies that non-compliance can be brought to light by examining money transfers. So it's pretty smart, I think, in that sense. Now, is this a surprise? Because it's a completely new process, according to most. I think if you pull it all the way back, if you get into debate, theoretical debate, back Feb 2020, before the budget speech, or sorry, before COVID, in the budget speech, page 154, They talked about strengthening the tax treatment. They talked about a more stringent verification process. I've marked in yellow there for you that it will also be a risk management test, which this is, that will include a certification of your tax status. We've so many times said to people, if you're non-resident, make sure on record you're non-resident. And the source of funds, that first pillar, where did you get the money from? And insurance that the individual complies with anti-money laundering and countering terror financing requirements, FICA. Of course, now we know FICA was not strong enough because we've been grey-listed since. It talks about a phased-in approach from 1 March 2021. And then second paragraph, you'll see they talked about that the Reserve Bank process to be replaced by a verification process. And then it still talks about the automatic share of information. Wherever you've got money as a South African, of course, there's that automatic sharing of information happening. We're seeing that in audits. On a daily basis, I deal with people that set up trusts, set up structures, set up companies without the right approval in place. And I said to them, guys, it's a matter of time before it's kind of born weak. You can't do that. You must set it up correctly. So after this, no major developments. And then 24 April 2023, there's this new enhanced tax compliance status PIN. I'm showing the exact words that we can't get these words wrong. It's introduced to facilitate the consolidation. I've underlined consolidation of foreign investment allowance and immigration applications into a single application. The reason I kind of emphasize that is there's been press out there where certain advisors have said there's no more foreign investment allowance. Other advisors have said there's no more immigration. Respectfully disagree. You'll see from the steps that follow, it's absolutely still there. It is a consolidation of those two. It's not they've consolidated those two in one, which means it still exists. It's just now a consolidated approach. They call that single application approval international transfer, or AIT. Also, there's no more a tender option. There's just a good standing certificate, the TCS, where a third party must verify your status. And then very importantly, again, we've so many times preached this, prior to requesting a tax compliance status for non-residents. So if you're non-resident, if your client's a non-resident, you should, it kind of reads, must complete the cease to be resident process. So if you are trying to take money abroad and you tick on the system I'm non-resident, but that does not line up with the underlying documents that you're non-resident, they're going to decline your process outright. And again, this is not a matter of our opinion or somebody else's opinion. It's a matter of what the SARS system says. If the SARS system says it's still marked you as non-resident and you've been out of the country for 20 years, SARS do not know. The responsibility is yours. It's a criminal offense to not have your SARS status updated or your details correctly noted. You have to go retrospectively change your status to non-res. Otherwise, you will not be able to follow the non-res route for this. The required supporting documents, I've underlined that because it's heavily driven by that. In respect of this AIT, have been updated per foreign exchange control processes and per new tax laws. I know that SARS deals directly with mainly the Reserve Bank and authorized dealers on this, and I think they keep enhancing the process. There's a couple of things we said to them don't quite make sense, which I know that they themselves have I think, taken up with him, and there's changes of the process on the way. Then in the 3rd of May, again, a media announcement on this. Interesting choice of words. It says it was introduced 24 April, and it makes it quite clear it will be harder for taxpayers who are unwilling to comply. you'll see why, when I take you through the process, why it said that. And then additional information requested on the AIT process allows SARS to ensure that all required tax payable has been accounted for, and if required, address it through verification or audit. And again, this forms part of the SARS modernization journey that aligns to a strategic intent of voluntary compliance. So, and I'm hammering the term of strategic intent, but it shows you this term comes back 3 years ago already. It's part of a process and a design. You do not need to do this if you're a South African that takes out below $1 million, but if you are a South African above $1 million, 10 million, 50 million, we took out for last year a client, I think 1 billion rand per individual, you have to go through this process. If you're a non-resident, any amount that you have to take out, you have to go through this process as a non-resident. Then you obviously have to go through quite detailed disclosure of information. If you look at the guide, again, they talk about the tax compliance status request, the approval, the AIT PIN, and again, I underline it to emphasize the point, it's previously known as foreign investment allowance and or immigration. Very clear, the underlying law has not changed. If somebody says to you the underlying tax rules have changed, that enables this, or international laws changed, I think I'd like to see that. Happy to be wrong, but I kind of comment on those things all the time. The law, the foundation is still the same. It's just previously known as foreign investment allowance and immigration that have combined it now into a single term. I just think then, how do you start a topic as complex as this? Especially as we speak, we've given the training to all the tax practitioners for the Institute of Tax, for SAIPA. We're doing it for SAIPA. We've done it for all the financial planners. Where do you start this conversation? I think a good place is to remind ourselves when we do this process, this section 235 of the Tax Administration Act, it's your criminal section. 234 is, of course, the other section. 235 is a person who makes or causes or allows to make any false statement or on a return, this is not a return, or other document, which is, or signs a statement or other document, you have to sign this without a reasonable grounds for believing the same to be true. So when you do this process, when you complete it yourself or for a client, you must have a reasonable ground for believing that it's true. Otherwise, you are in trouble. And then that 2352, that is kind of this controversial, what I would call reverse owner section. This is probably the topic of a master thesis or two or a constitutional court case to come. But just read how hard they've worded this. Any person who makes a statement, unless the person prove that there's a reasonable possibility that you're ignorant of the falsity of the statement and that the ignorance was not due to negligence, basically is regarded as being aware of it being false. So it's a bit of a tongue twister. It's a double negative. It is, in my view, kind of still a reverse onus of proof, but I don't think it stands for criminality, but that's the law. But read it for yourself. If you complete the form, if you help somebody else to complete the form, you're a person, you're making a statement. We now know that statement is true. You've put 0 into a block where it's not 0. So you've put in 0, and they say, unless you prove that there's a reasonable possibility that you were ignorant of the falsity of the statement, so you have to prove you were ignorant, and that the ignorance was not due to your negligence. You ask the question, did you get confirmation in writing? Then you are regarded as being aware of the falsity of the statement. So this is a big risk item, I think, for everybody involved in the process going forward. Then from a practice management perspective, and I thought, how do we attack an animal like this? our business's approach is we start with supporting documents first. We're not saying this is the only way. We're not saying it's the only correct way. Others might strongly disagree with us that this is the right way. But our thought process is that once you've done the SARS process and you've hit that submit button, and you don't have that support, that obviously going to cause a delay in finalizing it. What is the perception of the SARS official? Surely these guys must have had these things ready for me. Has a false statement been made? I mean, if you put something down and you then go ask your client and he comes afterwards and says, but that's not kind of completely accurate, why do you not ask me this up front? I think you sit with a pretty upset client. And then you can go cancel this, but even if you cancel it, you'll see from this approach, everything creates a permanent record. If you look at the tax court cases of today, it's not what happened last month or last year or even 3 years ago. It's stuff that happened 10 years ago that today is a problem. So be very careful of that permanent record that it creates. And that's also why I kind of advise my high net worth clients, let's do the process now, get the new PIN, apply for it for 12 months to be valid, and then immediately when it expires, apply for a new one that just builds on the previous one. I think that is a prudent approach that from a banking perspective, from a regulatory perspective, in terms of for your financial advisor, for your bank, you're always ready to do the transfer when the time is right, whether it's a currency or a need requirement, the time is right. So when you apply for this PIN, you need to show specific documents that demonstrate the source of the money. We'll go through all of that. You need to show a statement of assets and liabilities at cost. Now, that's what you paid for it. It's not what it's worth today. It's what you paid for it that's important. People keep getting that right. So I'll repeat, it's cost price that's important. Where you are a resident for tax purposes, you need to indicate where you're putting the money. Let's say if you're a South African resident, we've got the right to know where you're going to put that money. If you're a non-resident, it's not the case. If you're a non-resident, so you tick the box, I'm a non-resident, they want to see proof of the fact that you are a non-resident. They want to see proof of the fact that you've paid your exit taxes, that you've done it correctly. You obviously can transfer either cash or you can transfer securities, listed securities. If it's listed securities, they want to see where you're transferring it to, and then that power of attorney is very important if you're doing it on behalf of a client. So source documents, I'm going to fly through this just to kind of give you a feel for it. If it's cash, they want to see the bank statement. If it's a trust where you're getting the money from, I'm going to pause a little bit on that. I think they've just finished the testing for IT3F, which is so it's an IT3 5 certificate that's got normal income in it, IT3A, B, C, that we all know. Now there's the IT3F, which is going to deal basically with charities, qualifying donations, and they're implementing an IT3T later this year, either this year or next year. The moment the plan is this year. But trust is absolutely on the radar. And they say, if you get a distribution from a trust, we want to see a copy of the trust deed, resolutions from the trust making the distributions. You'll be amazed how many trusts don't have proper resolutions drafted. They want to see details of the source of funds distributed by the trust. They want to see a bank statement of the taxpayer, that's you or me, issued on the date of the application, reflecting the distribution from the trust. And they want to see the bank statement of the trust reflecting the distribution to the taxpayer not older than a month old. They want to see the share portfolio of the trust. If you're transferring shares, they want to see the trust financial status, financials. How many trusts we know that do not even have financial statements? This is the compulsory list if you say, I'm transferring money abroad from a trust. And so the list goes on. So if it's a donation, they want to see the declaration of the donation, your IT 144. How many times have I told clients, other practitioners, guys, please do your donation tax return with SARS. If you do donation, if you do 100,000 donation between spouses, they want to see that donation tax return. So they want to see a declaration of the donation. They want to see a bank statement of the donor reflecting the donation paid, not more than a month old. They want to see a statement of the donee issued on the date of the application, reflecting that it's been received. They want to see proof of any donations tax paid. If it's inheritance, they want to see the L&D account by the Master of the High Court. They want to see the bank statement showing that you've received loan agreements. So our tax attorneys draft lots of loan agreements at the moment. They want to see a bank statement of the lender showing the loan amount, not more than a month old. Bank statement, the details of the source of the capital, the bank statement of the borrower. If there's between a trust and a trustee or a beneficiary, there's a list of items. It's been a company, director, employee, there's a list of items. And so it goes on. The highlights, sale of property, interesting thing. I've kind of challenged them on this. If it's from proceeds of sale of property, they even want to see the capital gains tax calculation. So you can see it's a conveyancing letter, proof of receipt. If it's owned jointly, they want to see that split between the two because who they're approving it for, they want to see that capital gains tax calculation on the sale of property. If it's a sale of shares, first thing they want to see is what is your capital gains tax? Why are they asking for that? Because they can't collect it legally yet. Because they don't want you to transfer money abroad that must be used for tax. That is the philosophical thinking behind this. If it's sale of crypto assets, they want to see the trading account reflecting the trade. They want to see the bank statement reflecting the money available for transfer. They want to see bank statement not older than 3 months. Investments, royalty income, earnings. They want to see the supporting documents for that. Annuity, they want to see the document for that. Other, they want to see the document for that. This is a 2.5-hour presentation I'm condensing into a very short period. So this just gives you a feel for the supporting documents. Then practical step-by-step. This is my e-filing profile. You see my name is CG Botha there. I'm good compliant. You can see I've got little green block boxes there. So overall, I'm compliant. If those boxes are not correct, there's a whole process you have to follow to get through this or to get those block boxes compliant. But that for me, if your tax practitioner said to me, here's your statement of account, it shows you don't owe SARS money, or whatever it shows you, I want to see those boxes and I want to see what's behind those boxes. But that is critical to ensure that you're compliant. That's the way to really know that you are compliant. You'll see there's a My Compliance tab there. And then on the right-hand side of that, there's a Tax Compliance Status Request tab. And when you click on that Tax Compliance Status Request tab, this is what comes up. And the first thing that you'll see there is a foreign investment allowance, an immigration, and an approval international transfer. And then, of course, the logical question is, but why is foreign investment allowance and invest in immigration still there? All your old applications is going to be stored there. So the system does not forget. Whatever you've done in the past will sit there. Even though you can't do new applications under that, it will now, new ones will be under approval international transfer. And then when you go into approval international transfer to apply for this, then you'll see the fun starts where first is who's requesting it. So here you obviously have to put in the cell phone details, the email who's requesting it. It's easy stuff. And then the next slide is kind of where the fun starts. It's a bit of a busy slide, so I'll blow it up for you now. But you'll see when I blow it up for you, the first question is indicate your tax residency status under which you're doing this. South Africa resident or non-resident. And that determines completely diverting paths in terms of what happens there after you've ticked that box. Then if you say that you're non-resident, the first thing they want to know is the date you cease to be South African resident? Where will you be a tax resident? And I want to know the total value of your transfer. Then the other questions, are you beneficiary of a trust, local or foreign? Do you have a shareholding, directly or indirectly, in any legal entity of more than 20%? Do you have any existing loans to a trust, local or foreign? That is the first questions that hit you. So you can see how important tax residency plays here. You can see how important a relationship with a trust plays here. And this is just the opening hand of all of this. Once you're through this, there's basically the screen that comes up, and there's a drop down that happens there. And on that drop down, if you click on that drop down, it will basically say, where do you get the money that you are transferring from abroad? And your options are same as the supporting documents: cash or savings, distributions from a trust, donations, dividends, inheritance, loan, sale of property, sale of shares, sale of crypto assets, transfer of listed securities or other. And you can literally go into each of that, and under each one of them, as you go into that, it asks you lots of questions. Like under a trust, I think there's 7 questions. It wants to know who's the beneficiary, what's his passport number, etc., etc. It goes through detail. They really want to know, where did this money come from? Once you are completed with this step of where the money comes from that you want to transfer, then the next step after that is they want to know, does it make sense that you've got this money? And for that, you've got this assets and liability sheet that comes up. And there's 2. One is your South African assets and liabilities, local assets. So assets on the left-hand side, liabilities on the right-hand side. And the next one is foreign. So you can see all of these are compulsory fields. You must put in 0 if you've got none. I asked SARS in a meeting jokingly, so I actually have to declare my chicken and my sheep. And they said, well, yes, you should. Quite seriously back. So what is the local assets? Fixed property, financial instruments, shares, unit trusts, equipment, machinery, stock, personal effects, shares in private companies, financial instruments, motor vehicles, livestock, financial instruments, crypto assets, that is that one, livestock, other assets, loan accounts, net capital of a business, debtors, cash in hand. And all of this, you can't hardwire this. Whatever you type in there adds to that total local assets block that's locked. And then liabilities, mortgage, bonds, loan accounts, creditors, bank overdraft liabilities, all of that adds up towards locked field total liabilities. And your net worth there on top, that is then basically assets, liabilities. Now, I've had a discussion with SARS. I said, guys, if you ask these things at cost, they don't add up to my net worth. That is cost less cost assets, less cost liabilities is net cost. That can be explained to past tax returns, but my net worth is what it's worth now. So they said, don't you worry, we're going to change the word net worth to something more appropriate. I don't know if it's happened yet, but they said it's a no-brainer, it should not be net worth. Once you're done through this sheet, and this is also controversial, whether you're resident or non-resident, they want you to go complete your foreign assets. Same format, foreign assets. And obviously, I said to them, come on, if somebody has left South Africa 10, 15 years ago, they're not going to disclose to you their foreign assets. And they're going to say, well, why not? So we're still fighting that fight, but the question's been asked. Again, the net worth block is wrong, but they want to see both local, both foreign. It's all compulsory fields, and it all adds up automatically for you. Then when you are through this, there's this issue around cost or market value, because once you've submitted this form and you've done your submission, you will automatically get a request from SARS for supporting documents. So the first thing is I want to see relevant material that demonstrate the source of the total value of your transfer. That is that supporting document list I've showed to you. And then they want to see a detailed statement of assets and liabilities, local and foreign, for the previous 3 years. It's stock standard. It's coming your way. It's not a person that types it out. It's hardwired into the system that they're asking you for this. If you're doing it on somebody's behalf, they'll also ask you, there is a third question for a power of attorney. Then in terms of the supporting documents, this is again just from the guide. I think when you apply for this, you must submit, as I've said, the material that demonstrate the source. The first bullet, the second bullet is your statement of assets and liabilities for 3 years, and then thirdly, the power of attorney. If it's a non-resident, you have to prove that you've ceased to be a resident for South African tax purposes, including the date. Why do they want to know it? Because they want to calculate that 9H deemed disposal on you. If you're non-resident for a family unit, they don't allow it. You want to split up into individual family members to make sure they're all registered, that it's done correctly. And then just for closing off, they of course confirm this has got nothing to do with if you want to cash out your pension fund, your preservation fund, your retirement annuity fund. You can only take that out after you've been non-resident for 3 years on record with SARS. So that pretty much is how that process goes. Once you then have done this, they come back, and this is what a certificate looks like. Sorry, it's a bit small. It's our first one that we got on the 4th of May 2023. So we're proud of it. You'll see there is approval international transfer naming there that's not blocked out. The rest is, of course, confidential, which we can't show. And then we obviously test the system. This is the application declined. They say that they decline it. Your TCS application was declined due to the following reasons. The taxpayer must apply for non-residency status before the application can be considered. So again, this is somebody who says we were absolutely guaranteed that we are non-resident. We've been told that by our advisor. We've got opinions on it. We said to them, but the SARS system shows that you're still resident. Yeah, but I'm very sure I'm non-resident. And then we thought, well, let's just show you. And we applied, and there it kicks it out. Why? Because the system has not changed to non-residency. You must do that system change first before you can go forward. From our perspective, I think if you come talk to us, if you're an advisor, please consider following this approach. First, do that tax diagnostic. You do not want to follow this process if your taxes are not fully up to date. It requires a deeper check. You must check that CIPC records. While SARS and the Master Office don't talk with one another well at the moment, SARS and CIPC talk really well with one another. So you must make sure that your CIPC records are up to date and correct. And the number of cases we've got that somebody guarantees us their CIPC records are clean, and then they're not. It is amazing. It's that thing that you signed in your student days when you're drunk one evening and you started a company and you registered the company and it's been duly deregistered since, but nobody ever informed SARS of it. And your name is still linked to that company that's not deregistered to SARS and it's non-compliance. You've got a problem. This is not going to work. Second, you must do a reasonability test. You must say, does this thing make sense? We've just this morning submitted supporting documents for somebody that's taking out about 70, 80 million rand abroad. And this person has disclosed for the past 15 years, I think probably about 500,000 rand worth of income per year. We done a reasonability test to say, listen, you declared 500,000 rand income. How come you've got that amount of money to take abroad? That question SARS is going to ask you. We do a reasonability test. And of course, we're very comfortable that we can explain where that other money comes from. Otherwise, you would not start with the process. So do that reasonability test to say this thing stacks up. The system, don't forget, you can go back 15 years, easy peasy. You can go back 17 years on the e-filing, I think, and basically look at the historical records in terms of returns filed, what was declared. So have a risk mitigation process, have a roadmap. Think about with the end in mind that ultimately I want my bank and my authorized bidder to be able to transfer it abroad. They need the AIT. For me to get the AIT, my stuff must make sense. And then obviously, once you've got that approval, then we're out of the game. Then it is really up to your bank, your authorized dealers. We as a firm, unfortunately, we're pretty much tied to Standard Bank. They're one of our best clients. They're the biggest bank in Africa. So even if you're another bank, we apologize for that. But from our process is they are then absolutely business ready that they can execute this tax compliance PIN. We've just seen very, very good advice from the Forex team. So I know they're second to none, especially when it comes to quite complex applications. We don't just see that they just close their eyes and submit a thing. You really get good advice there. So consider that. Then I think from a poll perspective, Dylan, will you take this over, please, just to get a sense?
Yes, of course, Jerry. Thank you so much for that part of the presentation. And we're still doing good for time. A couple of questions have come through. So if I can just encourage everyone while the poll is running, if you can please just get those questions through. Let's keep Jerry busy for the next 15 minutes. So the first question of the poll is, do you believe then the enhanced process has been implemented with the intent of auditing wealthy taxpayers to uncover potential non-compliance? You've got three options there. Yes, where there is any non-compliance, it allows SARS to investigate the full extent of the taxpayer's wealth. Somewhat, as this may be SARS overreaching, and then no, SARS is simply enhancing its processes. We're then also asking, what is your view on the AIT process, considering the supporting documentary requirements by SARS? Again, three options there. Taxpayers can handle the process on their own without the assistance of a tax practitioner. The assistance of a tax practitioner is preferable, but not mandatory. Given the level of detail and risk of criminal sanction, the assistance of a tax practitioner and or an accountant is essential in the process. So just would be very interesting to see the results from our attendees today versus what we've seen in the various SARS sessions that we've had with the recognized controlling bodies. We're sitting at about 40% participation now, so we'll let that run a little bit. I can already start to see the spread, and the results are pretty much in line already with what we saw in the previous sessions. We'll just wait a couple of more seconds. Let's get that participation up above 50%. We still only have 5 questions in the Q&A, so please pop some more through. We want to use the most of Jerry's time appropriately towards the end of the session. I'm now going to end that poll, and I'll share the results for the benefit of the audience. Jerry, you should also see those results pop up now on your side. Okay, so for the first question, 60% of the attendees say yes, and where there is any non-compliance, it will allow SARS to further investigate the full extent of the taxpayer's wealth. 37% said somewhat, and then interestingly, only 3%. No, SARS is simply enhancing their process to make compliance hard and costly. So definitely looking at that first answer, which is pretty much in line with what we saw with the previous sessions. And then if I just go to the second poll, what is your view on the AIT process? So specifically, taxpayers can handle the process on their own, only 13%. The assistance of a tax practitioner is preferable, but not mandatory, 17%. And then a massive 70%, given the level of detail and criminal risk of criminal sanction, the assistance of a tax practitioner and or an accountant is essential in this process. I think, Jerry, we saw the same in all the other sessions with the FBI site and CIPA, where I don't think a taxpayer at all should approach this process alone. They need to have their guys in their corner. So thank you for that poll, everyone. Really appreciate it. Jerry, I think we can start with the questions then. We do have 10 minutes and we're on time for the question section. So the first one that I'm going to pose to you, when completing the AIT form, is it correct in saying that the form is completed according to the assets and liabilities at the time of submission current, or with supporting documents for the last 3 years at cost?
So, firstly, the the source document that you submit to show where you got the money from must be what it's worth now. So, for example, you say that I've got 3 policies or 3 unit trusts that I want to cash out and move abroad with my financial advisor. That must show the value now, because SARS want to see how does the value get made up of what you are transferring abroad. When it comes to that statement of assets and liabilities, it is, and I repeat, it's the cost price of that asset that you need to put in. So if your unit trust is now worth 10 million rand, but you've put only 1.5 million rand in, you've had an incredible great run with your unit trust in terms of growth over how many years? From 1.5 million to 10 million. Even though you put your supporting document in to show that I've got 10 million in my unit trust, that's what I'm moving abroad, you put in only the cost price of 1.5 million on the statement of assets and liabilities. Of this, we are very sure. If I'm not explaining that well enough, please just drop me another question here and I'll try and do better.
Fantastic. Thank you, Jerry. Another one, if you submit an application but you left out the supporting documents, will SARS engage you and ask, or will they just decline the application and you have to restart the process?
I'm pretty sure they will just... It's a big topic with SARS at the moment to say, listen, there's so many people obviously adjudicating this. There's not always consistency on this. We've had a matter which I took up with SARS on behalf of a tax practitioner, where they declined quite a large amount to be moved abroad. That was a dividend. And they said you did not attach the dividend tax return to the supporting documents. And we said to SARS, the dividend tax return is not on the supporting schedule. Surely your assessor should have asked for it if he wants more documents, but it's not on your standard list you have to submit. And SARS said, you're actually right. We should never ask for that, because why would we ask for a dividend return if we have that on our system already? So you do not sit with a consistent adjudication process. What I do know is a request for supporting documents happen automatically after you filed your return or your application, because you've done so many, and we can see later on the day, next day, it comes through. And it does not list specific stuff. It just says, give the supporting stuff to the guide. So in my view, if you don't submit everything that's there per the guide, your application will be declined and you have to redo it. Even if the SARS official is wrong in their process, we are by far the #1 firm that comes to litigating against SARS. I think SARS gets about 60 Section 11 notices a month. We do a fair chunk of those. I don't think it's wise to fight them on this. I would just redo that submission and make sure my supporting documents are spot on when I do that.
Thanks, Jerry. Very clear. Then we've got 5 questions now in the Q&A, additional ones. So the first one, what are the exit taxes if you choose to become a non-resident?
So the principle is, as a South African resident, you have to pay tax on your worldwide income. The moment you become non-resident, I don't care if it is on the 15th of June 2023 or 2022, on that exact day that you become non-resident, SARS loses its right to tax you on your worldwide income. And what 9H says, it's very similar to the death and taxes provision, that on death you're deemed to sell all your assets the moment before you pass away. You can't escape death or taxes. 9H says on the date before you become non-resident. So if you become non-resident today on the 15th of June, the 14th of June, yesterday, the end of the day, you're deemed to have disposed of all your assets. And we're basically going to calculate our capital gains tax on those assets as if though you sold it, because it's the last time that we can collect that tax. Now, very importantly, this does not mean that you really have to sell anything. It means you've sold nothing. You're deemed to have sold it. And secondly, it doesn't apply to all assets. It doesn't apply to cash. It doesn't apply to currency. It doesn't apply to certain wrappers. It doesn't apply to your pension fund, your preservation fund, your retirement annuity. It doesn't apply to fixed property that you've got. Those things, tax events, are different. But it does apply to, for example, if you've got a UK property registered in your own name, if you've got a unit trust, if you hold shares or stuff like that. So perhaps join one of our more technical sessions, but that is the 9H, which is a deemed disposal rule, and that is not a South African animal. The same happens in UK, Canada, France, US. It's a worldwide rule of deemed disposal when you change non-residency.
Thanks, Jerry. Next one from Cindy. Person immigrated to New Zealand over 10 years ago. She receives a small pension. Does she still need to apply for the AIT?
I would say yes, because she should be non-resident on record. So she should have that AIT to move that money abroad. The bank should also, I know a lot of the banks are taking it very seriously to make sure that your residency status is correctly noted on the system. And of course, if you keep moving money abroad, and that's your pension, that's where you permanently reside, you've become not ordinarily resident in South Africa, and there's no 1 million limit. If you're non-resident, you must get that PIN to move it abroad.
Good. Next one from Chepo. How far back does the source of funds check go in terms of AML or KYC, as it feels related to how FICA is also approaching its overhauls?
Chepo, I think your comment is fundamentally completely correct. I think the SARS process is informed by the FICA or FICE process effectively. So it is effectively a control of the same nature. I don't quite know how far the tax rule is you have to keep your information for 5 years. But what SARS has said is if you've got more than 1 million to transfer, you should be able to have to show how you got that. What if you shredded all the information past 5 years because you don't have to keep it? If you're a company, but the companies actually only have to keep information for 7 years. So I've not yet tested how far they go back with that. What they're asking for you is the cost price of your current assets. And most individuals, I don't yet have an individual that has come across an asset which they can't tell me what the cost price is or how they got it. So I guess it's waiting for me, but I can't tell you how far they in theory can go back. Of course, as we all know, if there's been material non-disclosure, there is no prescription under South African tax rules. They can go back indefinitely. The onus of proof sits on you. But I agree with you, it's aligned to FICA.
Thanks, Jerry. Next one from Cindy. Is the year end for assets and liabilities Feb each year for individuals?
My understanding is, Cindy, yes, that's 3 year. So when you complete that, it's a cost price now, but when I want that 3 years, it's the end of Feb. And obviously, it's for them to do basically a balance sheet or a capital recon to say, where did you get that capital from? And does it align with your tax return? I would agree with that.
Good. Then from Terence, I have a number of clients that have left SA and settled offshore. SARS have not been notified on their non-resident status until now. Will regular annuity payments need to go through this whole application process? Some may have intent to return at some point. Does this make a difference?
Well, Terence, I've been thankful for the questions. I think we must have a chat with my team. Let's make them all non-resident per SARS properly. If they have not notified SARS that they become non-resident, you might have a 9H exposure on those clients in the past. Then you have to do probably a VDP with SARS first or negotiate SARS first before you just do the process. Annuity payments will have to go through that process. Otherwise, the bank would sooner or later it's going to catch up. And I'm sure how you're regulated, are you a financial advisor, are you an accountant, are you a tax practitioner, probably per your professional rules that you in any way have to do that. Some may have the intent to return at some point in time. Does it make a difference? It makes a huge difference what that intent is. Is intent to leave South Africa permanently and perhaps I might come back one day, then you definitely are non-resident. If the intent is, oh, I'm just working abroad and I'm definitely coming back to South Africa later, then you are South African resident all along. But the way that you break South African residency is then per a double tax treaty, which is, of course, again, our discussion. But there's two ways of basically becoming non-residents. One is with an intent, which is your ordinary residency test. The other one is through a double tax treaty, which is kind of a segment on its own, where a tax treaty comes into play. I like the narrative which you've kind of used of saying you may have the intent to return at some point in time. And it's strike law in South Africa that you're allowed to change your intention. Good I think it's on page 74 of our expat tax book. I actually had a look at it today, had look at the Anglo-Val case again that says that when it comes to intent, SARS will look at objective documents of what your intent is. Your subjective belief is kind of discarded in that process. So you are absolutely allowed to leave permanently, and you're absolutely allowed to say, listen, one day when I retire, I'll see what the world looks like. I might come back to South Africa then, and you're very welcome to do. I even have a client that immigrated from South Africa to Canada. 4 years later, he was asked to come head up the local South African office. There's only one SARS ruling out on an expat or a South African that left South Africa and came back to South Africa for 3-4 years, and it's for this particular individual. And SARS confirmed he remains non-resident for this period that is fixed term back into South Africa, because he was seconded to South Africa fixed term and remained on the Canadian Social Security. His house was there, etc., etc. So quite a complex area, but I think perhaps reach out to my team, and this is the stuff we love.
Great. From Jean, where a taxpayer left many years ago and now wants to change tax residency status with SARS, normally to withdraw an RA, and accumulated assets overseas with overseas earnings, they will have to disclose those assets on the AIT. Will they be charged CGT on those assets?
So, Jinda, what's very important here is you must get this right. And we've got one or two attorneys that really gets this right, is you must backdate that change of tax residency. So in the more complex presentation, we actually have an example of somebody, I think, that left in 2007. So if you did not change your tax residency when you left permanently, you have to go back to SARS and say, this guy actually left in 2007, backdate my non-residency certificate to that date. Now, of course, they're going to have questions, they're going to argue with it, but you need to have a strategy in place. But they will not be able to charge CGT on today's value. They will have to charge CGT on the 2007 value per my example.
Thanks, Jerry. Then Gerrit, hi, the Home Office refused to renew your passport because you have a different passport. Renew your passport because you have a different passport. Are you a resident or not, and do you still need to go through the SARS non-resident process?
So, Gerrit, firstly, passport's completely different issue. Citizenship has got no bearing on this whatsoever. What you're referring to is that probably you got another passport, or this person got another passport, perhaps a British passport, and he did not get authorization from the Department of Home Affairs in South Africa to retain their South African passport. There was a form he had to complete before he took up that UK passport that says, yes, you can take up the other passport, you'll keep your South African passport. So because of that, under the old rules, that lapsed. But I think it was earlier this week or late last week, the Constitutional Court said that rule is unconstitutional. You cannot automatically lose your citizenship. So I know it will take time to catch up on that, but I must basically give you your citizenship after that. And if it's a very important issue for you, We've got quite a big immigration team as part of our office that does these type of things. But the rule has literally changed the past week that says Home Affairs cannot take away your citizenship. It's unconstitutional. If I were you, if it's not urgent, I would probably not fight the first fight on this. But you're entitled to your South African passport and citizenship, and they must issue you that passport, and it's got nothing to do with your tax status whatsoever.
Thanks, Jerry. Then from Ian, what step does one take to immigrate in terms of the date? Is that when you start your process to stay away 180 days or when you've qualified?
Ian, the 180 days is actually completely not relevant in this case. Residency in South Africa is not reliant on getting residency somewhere else, except if you use the double tax treaty route. And even the other 180-day rules, for example, in many other countries, US including, UK, I've kind of lost track. I qualified in UK tax, but I've lost track with their test, but they backdated anyway to day one. Just remember this: the day that you leave South Africa on the plane with a one-way ticket with a permanent intention to move abroad, that is the date that you immigrate for me on record. That's the stamp on your passport I want to see, and that is what I will use to get you non-resident. The rest is not relevant.
Thanks, Jerry. Next one from Tamsin. She said it has been answered, but the Sandy question below continues this. So I think I'll just jump to the Sandy question. Is there a limit to how far back in years you can backdate your tax immigration in order to limit the amount of exit tax payable? Or can SARS deem you only to be immigrating at the present date?
No, Sandy, I think, as I've said before, we've recently done it 2007. As long as we can prove that you left and you've not been around, we'll win that battle. They can try and deem you to only be immigrating at the present date, but they'll lose. So I can't speak for what SARS might deem or not. I can only speak for what the law is, and we will win that fight. Can't tell you if it's a big fight or a small fight, but we'll win it.
Good. From Leanne, how do you determine the cost price of a policy, example, permanent incapacity policy that is now paying out? Add together all contributions over the time since inception? Question.
Oh, Leanne, that's a complex question because there are so many different types of policies out there that's differently construed. The problem with these financial houses is they kind of add sometimes stuff together that should not be added together. But if I could just give the most simple answer, generally, at least now, except if it's a very old type of incapacity policy, is that premium that you've paid, all it is insurance. It falls under the Insurance Act. It's not an asset. It's the same as your motor vehicle insurance. If you paid your motor vehicle insurance last month, you were no accident or nothing happened, you can't go and say, hey, my motor vehicle insurance is worth something. That money is you paid your insurance, you haven't claimed. Same with life cover. I paid my life cover last month. Touch wood, I think I'm still here. That money is my premium is gone. So an incapacity policy probably does not, by its nature, have any cost price as an asset. If yours are one of those old ones that do have an asset, if I were you, don't try to figure it out. I'll just go to my financial advisor and say, what do I put on my AIT for? And that is my own proof on which I will move forward. But the whole policy amount would definitely not go towards the asset value, probably a very small one if I know how those old ones work.
Thanks, Jerry. Then from Daniel, if a client exited SA 25 years ago but never formally immigrated, should a formal exit be done now? His residency status was permanent resident only at the time.
Daniel, we still do that. We still backdate it. had a case where SARS came to us and said you can't backdate residency to before a person immigrated, before South Africa introduced the residency basis of taxation in 2001. You can't, in that case, get a non-res certificate. And we said to them, we want that certificate. We said to them, we're even willing to go to the High Court, but we want that certificate. And they eventually buckled, and they gave us that non-res certificate for a person that left 25 years ago. And the reason is that certificate was needed by the bank, and for the process, because this person got quite a substantial inheritance from South Africa, and that inheritance don't move. If it's a non-res, you can't prove that that's a non-res. So my view is, if there's a reason why this person would need it, perhaps an inheritance, perhaps an asset still coming this way, perhaps wanting to make a reinvestment into South Africa, buy beach property, a farm, perhaps a business interest, absolutely go get it. 25 years ago or not, still get the AIT and the non-res certificate first. Sorry.
From Duncan, hi, if one financially immigrated under the old rules 2 years ago, paid the CGT and did everything according to the book at the time, then one can assume that doesn't apply to them at all.
Duncan, if you financially immigrated correctly, paid the CGT, absolutely correct, then clearly you've done the right thing. The only question then is, has the SARS system changed to show you as a non-resident? Because we've found cases where the SARS system and the background is not checked, that even though you financially immigrated, you've got your immigration tax clearance certificate, you've paid your CGT under deemed disposal, you even audited on this, the system is not ticked over for you to be non-res. So I would just do that check to say, can I please, whoever helped you for the financial immigration, or ask Dylan, can I please get a non-residency certificate? If you've got that non-residency certificate, then you know the SARS system is correct, and then you know it will not happen to you what happened to that client I showed you where it was declined. You know that when you apply and you tick non-resident, because you've got a non-res certificate, the system matches to your non-residency application route that you're following. So you should be fine. But make sure you've got that non-res certificate, please.
Good. Jerry, I know we're about 13 minutes over time, but the attendees are still quite high, and we've actually had 2 questions in the chat section. So if Sharon doesn't moan or anything, I'm going to just quickly bounce those to you. The first one from Marion: what if a person was born, lived and worked abroad for 25 years, and then lived and worked in South Africa for 30 years, and now moved abroad again with no particular intention to stay abroad or to come back? Would that original residency abroad contribute anything to determination of their tax status today? Or is it just based on the fact that they were a South African resident for tax, irrespective of which countries they may have lived in before?
You were in South Africa for 30 years, you're definitely South African tax and exchange control resident for that period. You have to do the non-residency step. You have to do the exit tax, the 9H deemed disposal. You have to do the AIT to get your money abroad. You have to inform your bank that you've left with permanent intent. Even if you never took up citizenship, if you just have a permanent residency status, if you've got a PR status, you can keep that PR status. You just have to be once every 3 years in South Africa to keep your PR alive. But that's permanent residency for home affairs purposes. For tax purposes, you become non-resident when you leave. So please do what I call financial immigration, which is the process of kind of wrapping it up and getting that non-res certificate. And if you move your money abroad, you have to do the AIT. And if you've got nothing left in South Africa after that, divorce from SARS and send them a thank you note and deregister for tax. Close the file. Don't get the tax number open if you've got nothing left in South Africa. That would always be my advice.
Thank you so much, Jerry. Sharon, from your side, thank you so much for having Jerry and I. I think we thoroughly enjoyed this session, and it was good to see that your members also didn't really drop off at all. Still quite a lot of guys on the line. So thank you so much for having us, Sharon. We truly appreciate it.
Thank you to both of you. I found it fascinatingly interesting. I'm sure, like myself, many people have got nuggets of concern, nuggets of relief, nuggets of, oh my goodness, where am I going to find time to deal with this? So very insightful. Jerry, thank you. You always are.